segments of the Starbucks business. We're going to look at from what segments comes the most revenue. We're going to run through some of their numbers. We will see what super investors are buying the stock, and then we're going to come up with the fair value of Starbucks stock. So let's get started. First of all, if you are not subscribed to the channel, you can do this by pressing the subscribe button under the video. It is absolutely free and you will not miss a single new video. Okay, Starbucks has famous coffee shops. And if we look at the revenue based on first quarter of 2022, we will see that 83.5% of the revenue comes from company-operated stores and 10.6% comes from licensed stores. So the most revenue comes from company-operated stores. The revenue from company-operated stores grew 17.4%, while revenue from licensed stores grew 38.6%. So it has higher revenue growth for licensed stores. The two main segments are North America and International. If we look at North America, we can see that Starbucks has 91% of company-operated stores, while has only 9% of licensed stores. On the other hand, if we look at International, they have much less company-operated stores, 80.4%, while they have 17.9% of licensed stores. So internationally, they have much more licensed stores than in North America. We can see that Starbucks has around 34,000 stores internationally, while in North America, they have around half, around 17,000 stores. Also, they have more than 5,000 stores in China, and the revenue from these stores are growing at a faster pace. If we look at the Starbucks revenue for the last 10 years, we can see that it was a steady trend up, except for the year 2020 because of the COVID. If we look at their dividend, we can see that it has a forward dividend yield of 2.15%. Also, the dividend seems to be stable. They have a payout ratio of less than 50%. They are not dividend aristocrats, but they have increased their dividend for the last 5 years and managed to have stable low payout ratio. So their dividend seems to be stable. Also, the management outlines several risk factors. First of all, it's the inflation. Inflation is around 8%, and that is on the conservative side. The effect of COVID is unpredictable, and Starbucks has issues with unions. According to recent news, they have conflict with unions, and that may be the main reason why the stock is down so much for several months. When researching a stock, what I really like to see is that if gurus, super investors, are buying the same stock, and if yes, at what price level. And Terry Smith, super investor that I follow, increased his position in Starbucks during the last 2 years. So right now, it is possible to buy the stock even cheaper than Terry Smith did. Terry Smith invests only in stable, high-quality companies that are even called bond proxies, because they have very predictable future earnings. Okay, now let's try to use several valuation metrics. First, let's use the free cash flow yield, next 12-month free cash flow yield. As we can see, the yield is on the high end, so according to this metric, at this time, Starbucks may be an interesting opportunity to buy, because the free cash flow yield is on the high end. Okay, let's use another method. We will use discounted earnings per share method. I have made a separate video how to make this type of calculation. What we basically do is that we take current earnings per share, we use current price to earnings, we will use the growth rate of 12%. What we basically do is that we take current earnings per share, grow them using the growth rate, and then discount them back to today using the required rate of return of 10%. After adjusting for net debt, we get the fair value of Starbucks stock of around $84 per share, which implies that the stock is around 10% overvalued. I would love to be the part owner of the Starbucks business. I like the fact that Terry Smith also bought the stock even at higher price, but for me, I would also like to have a higher margin of safety. So if the stock pulls back to around $65 level,